everybody. It's a pleasure to be here and speaking in front of all of you. So as mentioned, I'm the co-founder and chief investment officer of BlockRidge, and let's dive into a little bit of what BlockRidge does. So BlockRidge at core has three different distinct business models. Our first one is infrastructure. We provide infrastructure for RIAs, market makers, and different wealth managers to create SMAs for their individual investors, and as well as our second business vertical is investment banking. We currently operate a US broker-dealer that has digital asset issuance permissions, as well as an ADGM license, a Cat 3 ANC licensing to issue funds and manage client funds. Additionally, in Turkey, we have a distribution office that we work with a lot of asset managers and portfolio managers, as well as neobanks locally, and as well as in the European market. And our third business vertical is our DeFi strategies, which we enable different money market suites, and as well as looping strategies to enhance current products. So what is wrong with the market today? A lot of people came here and spoke about gold tokenization. They talked about other tokenizations of different stablecoins, etc. But the real problem we see today is there's $35 trillion of illiquid assets, and that's accessed by individual mass affluent investors. So what is mass affluent investors? Mass affluent investors is individuals who have $50,000 and $1 million of investable capital. And around only 5% of that is accessing private markets. A lot of tokenization companies out there focus on public market equities, treasury bonds, US treasury bonds, euro bonds, etc. But these are already accessible investment vehicles. We see a lot of our competitors tokenizing Apollo funds, KKR funds, Hamilton Lane funds. However, these are already accessed by HNWIs or HNIs in the market. Second of all, the biggest problem is regulatory friction. The question of how a Turkish investor is going to invest into a US security, or how a US investor is going to invest into a German security. Here, there's a big problem and a big legal cost. Let's say I'm an Indian investor that wants to invest in a Turkish private markets. I have to spend thousands of dollars of lawyer fees. I have to spend thousands of dollars setting up an environment here, opening bank accounts, etc. However, through a tokenized infrastructure, this can be seamless by 2 clicks. And as well as legal mismatches, this can halt different kind of investments that's conducting by institutions. So how we fix this is very simple and a little bit different than our competitors. As you guys might hear, there's a lot of Chintai products, Mantra products out there where they permission different RWAs on a chain level rather than a token level. This creates inherent fault in the whole ecosystem where you now have to source liquidity to the specific chain to source liquidity for the specific RWA. So at BlockRidge, we create our infrastructure token native, as well as enforcing different restrictions and permissions through different smart contracts. This can be your administrative tasks, such as dividend distribution voting functions, which is terrible. Let me give you guys a little example. I, on a personal level, invest in a lot of oil and gas investments in the US. And usually when I buy oil and gas investments, it takes 6 months to transfer ownership due to physical bookkeeping or inefficient bookkeeping standards done by oil and gas companies. Through a tokenized infrastructure, my shares within that specific oil and gas investment is book-kept on a public ledger that can allow for distribution of dividends to be more smoothly. Additionally, onto that, currently we can see T+5, T+10 settlements in private markets through tokenization, where the subscription agreement is signed directly on the platform. You can see T+0 settlement times and real-time NAV updates through oracles such as Chainlink, etc. So how does global now I'm going to come a little bit of global syndication and tapping into that $35 trillion market size. So how we do that at BlockRidge right now is our business model purely focused on a B2B business model. We work with asset managers, RIA networks, and different financial advisors, brokers, broker-dealers to distribute securities to underlying individual investors. We understood that it's very difficult to retain or grow your investor base organically, because why should somebody trust you? So we focused more on distributing to already partners that are serving those investor bases through our different RIA platforms and wealth management platforms and SMA products we offer through BlockRidge. Additionally, onto that, we have seen a huge success in distribution. A couple of our products in Turkey fit the market perfectly, and have been selling out like hotcakes. For example, one of our products allows for an investor to access a structured product that involves 20% of the VC-backed 20 of the largest VC-backed companies in the US, such as SpaceX, OpenAI, Neuralink, can be accessed through a structured product. Currently, we're distributing that through asset managers in Turkey, locally, such as Azimut Portföy, Neo Portföy, Q Invest Portföy, etc. So why this matters is very simple. We have seen the mass affluent market shift in a huge manner. Blackstone expects $200 billion of individual investor AUM to grow to $500 billion in individual investor AUM. KKR is seeing a 30 to 50% growth in individual investor AUM. So we are seeing a trend of individuals and investors wanting to participate more on private market assets. The reason of it is, due to different recessions in the market, private market assets have stayed more stable during recessional periods, because in public markets, you're dependent on however the market maker might react to the different outcome. So Turkey is a very, very important market for BlockRidge, and why that is shown by statistics. Turkey has been the third or fourth, and sometimes first, largest volume of crypto trading in the world. And don't believe it's because crypto is a great asset. Nobody really cares about Shiba Inu or Dogecoin or anything like that. They want to take their money out of the country and have a more stable currency. Can you believe that the Shiba Inu currency is more stable than the Turkish lira? That's an insane statistic to throw out there. So people are looking to invest their capital in USD denominations or Euro denominations overseas. And there's a huge problem with this. We're talking about a country that still slaps watermelons to pick them. So teaching them on how to switch over to this investment vehicles is so difficult. So in Turkey, we're doing very small steps. We have a partnership going on with the Chamber of Commerce and the Capital Markets Board to tokenize private companies on a share capital management basis and bring in their administrative tax on-chain. Additionally, onto that, we're working with asset managers, licensed asset managers, to distribute our originated securities to their individual investors. Currently, our alternative investments and our origination focuses on purely on alternative investments, private credit, hybrid structures, and equity structures. And most importantly, what I want to add here is everybody oversees the global mass affluent market, but when everybody talks about tokenization allows for liquidity, this is the pool they're talking about, is the mass affluent pool. At BlockRidge, our investment bank, we helped a neobank in the UK. I won't give the name out here, for their placement and fundraising. And they have been growing at $1 billion in AUM every single month by targeting mass affluent investors in the UK, which is a $2.3 trillion economy, $2.3 trillion market, sorry. And Monument has been able to capture that market and bring those depositors in through providing high-end services to their clients, such as concierge services, etc. In the UK, one of the biggest problems is I opened a UK bank account, and for the bank, I had to send my physical passport into the bank to open the bank account. We're in the UK, almost a couple $2 trillion economy. Why is this inefficiency? And the inefficiency happens because of siloed and fragmented market participants. So, my final message. Everybody thinks about tokenization of this revolutionary technology. Well, it's really not. It's allowing to conduct our current financial transactions in a more efficient and non-siloed manner. So I know I'm pretty young to touch base on this, but in the 80s, in the 90s, there was something called dematerialization of equity and stocks and different debt vehicles. This is the exact same thing. Just because you tokenize, you're not going to see billions of dollars or millions of dollars flowing in. However, you can access those billions of dollars and millions of dollars easier compared to traditional financial vehicles. Second of all, the law is the operating system. The law will always be there, so we shouldn't try to circumvent the law to create loopholes, mirror tokens, etc. There's a very good saying I heard in the podcast that says, everybody loves decentralization till they lose all their money. Then they want centralization to step in to save their money. And third of all, and number C, is we're going to be accessing new capital markets that haven't been able to be accessed due to fragmented and siloed financial institution infrastructures. So really appreciate you guys taking the time to listen to me, and thank you really much. Thank you.